Hey everybody, Brian here from quantlabs.net. We're going to talk about government data, how you can use it to profit from and generate some trading ideas. We got our usual gang here. Hello to everybody. How y'all guys doing? Okay, so what I want to do tonight is to figure out what type of data you guys use. I've been learning some really cool courses. I'm looking at using equities as a trading ideas for long, short, spread trading. Everybody's got their own goals. So what I've been working on are some MATLAB scripts for downloading FRED data and downloading ESI data from can't even remember the company, somewhere in Europe. We'll figure it out. Yeah, so I just want to talk about that, see what you guys think, and see what you guys use. So let's focus on you guys. Okay, I have an idea what most people use. How many of you guys use Europe equity at all? Just give me a yay in the chat box on the lower left. So I want to know who I'm talking to. I have an idea. Most people online are what they use. Okay, Jeff says yeah. Anybody else using European government data from the EC? And there's a goal for that. Actually, this is what I'm talking about here. This is the source right here. I'll put this in here. You can get some very cool info from right here under all. Can't even remember it. Where is it? It's somewhere in here. Here it is. You just download this puppy and you can get a lot of neat information. Anybody use this kind of information for equities? I got a Jeff said yeah. Anybody else? Or does anybody know about this? Gigi, do you know about this stuff, right?
Yes.
Okay.
But I like to do like shorter trades.
Right. Yeah. I realize that. But this is the sort of stuff you can get because I'm looking at holding positions for probably 30 to 90 days. But the information you can get from this site here, you can get retail, industry, services, consumer, and building. So I'll pull up one of these puppies. And we have our Excel. So here we can get it downloaded from the building for all of Europe, the Eurozone, and then you can also grab it from by country. So this would be EA, I believe, as Spain or one of them. But yeah, you can break it down by country. Belgium, we have Bulgaria. It's very powerful information. And then you can chart and get some sentiment and direction on which way the market for that sector will go. Anybody else use this sort of information at all? How many of you never knew about this but would find it very useful? Because I don't want to spend too much time on it if it's not useful for people. Anybody find any value in this? No? Okay. But like I said, you can download this information from places like Quandel. Let me just pull up Quandel just so I can give you an idea. How many actually use Quandel for any type of data? Okay. Jeff said some comments. Exactly, Jeff. You focus only on leading indicators. Yeah, you don't want to focus on lagging indicators. Just forward looking, because this will give you an idea of the direction on market, obviously. So what was I going to show you? Okay, let me show you an example here. Okay, Quandel, this is for Eurostat. So let's say this would be for Sweden. So this is a type of, it's very similar what you can download. Okay, buddy. Why aren't you working? So this is some of the issues I've had with Quandel. It's free data, but it's changes. I'm not sure. I'm still trying to understand how it works. But let's do some. Let's try the Michigan's consumer sentiment here. Just wanted to show you There's another trick I know of how to do this. Is do Quandel and then the code. Yeah, that should pull her up. I have no idea what's going on with Quandel tonight. But these are the issues that I've been having with Quandel. Oh, here we go, finally. But you can get similar information using these codes from Quandel. And then you can use various technology clients to load them into your system, MATLAB, R, Python. The only one I can works with is .NET, but whoever might use R, Python can definitely use it. Anybody use Quandel at all? Just give me a yay or an A. Yay? No? Yay? Nobody? Okay. Jeff uses it. Jeff, what do you guys think of Quandel? Have you run into any trustworthy problems with Quandel at all? You can speak if you want. Nobody's muted. You like it?
Yeah, I just check it mainly for reading stuff now, not for lagging stuff.
Okay, so you're not using it for downloading. Anybody else? We got two Jeffs. Jeff G and Jeff J.
I did pull it into Python. Though.
Oh, you do? Yeah, of course you're a Python guy. And Jeff uses it as well. Yeah, I just tried to use it more for I guess scaling it up. I just had all kinds of issues with it. You can see what just trying to demo it. Because the problem is you can't use Yahoo Finance for data as well. I don't think there's any government data at all. Is anybody aware of that? If you can use Yahoo Finance for government? Okay, so Jeff says instead of parsing websites manually, you get pure data from Quandel. That's true. When it works.
You can also get from Bloomberg a lot of data.
Can you?
On their website. Yes.
Oh.
I mean, yes, you have to work a little bit, but the data is available on the website.
I noticed
For
that.
example, I used to look at when the Greek crisis from 2 years back.
Okay.
I used to look daily at the price of the Greek bond.
Okay.
They don't have the API, so they don't have endpoints to directly download the data. But the data is downloaded in the back so that they can display it in the web page, and you can intercept that code. So you can do it yourself.
So what you're saying is you use a web scraper kind of thing.
Yes, basically the website does a request in the back, in the background to get the data and to plot it. So you can do the same request, but do it yourself instead of loading the website.
Yeah. So as Jeff says, to scrape it.
Yes, the resolution was not great, and you couldn't go. I mean, there are some problems, but they have a really large amount of, mostly, so not exactly like economic data, but you can get the price of pretty much everything there, like every kind of bond or the world, stuff like that.
Okay, so let's say if I do the Bund.
No, yes. For example, click the first one, which is the Deutsche Bank.
Yeah.
Deutsche Bank.
Okay.
So you can see the prices here, and they loaded by when that stuff was spinning. They loaded the data in the background.
Right, but can you get the raw data?
Yes, I mean you have to, for example, press F12 on your keyboard.
Oh, okay.
And now you have the.
Oh, I see what
web
you're saying.
inspector.
Okay,
And
right.
if you click here on the network tab, for example, the network,
Yeah.
it's the list of buttons.
Yeah. I know. I see what you're saying. Yeah, you gotta
And
go.
you can see there you can see what request the website sends, and then you can do from your code the same request and get the data.
Right.
And they pretty much have a format. So for example, you would take the ticker like GDBR10, in, and you would specify the period, and you get the data.
There you go. And Jeff was asking about if it can be downloaded as an XML or a JSON file.
They pretty much serve it as JSON, so that it's easy for the website to display. But you have to work with what they have, because this is not for public consumption, basically.
Right. But you can do it, eh? Wow.
For example, I use this to look at the credit default swaps for a lot of assets.
Okay.
Years back. Which they were kind of hard to get much everywhere.
What do they put a huge limitation on what you can download per day or per hour? Let's say.
I never hit it, so probably, but I never hit it because, like I said, I only a few. I didn't make many requests, so like under 50 requests per day.
Okay. Wow.
If you try, maybe there are some limitations. I don't know.
Yeah, I know there is with Yahoo. I haven't hit any yet, but I know I will.
This is also, you can find out what the rate is, and then you can just stay under the rate, and in a week you'll download a lot of data with this code.
Right. I think Jeff was asking about how far back it's delayed. I mean, this is really used for passive, right?
I mean, the data is real time from what I remember. So
Is it?
Yes, pretty much.
Because I know with Yahoo it's delayed by, what, 15 minutes or something?
That was because, for example, for some stocks and for some stuff, there are some contracts. But that is only when you try to download it using the API. If you go in the Yahoo Finance website without the API, so in the browser, the data will be real time.
Right.
So it depends.
Very smart.
But even if it's delayed, something like 15 minutes, I mean, we are talking here about trading for month trades, so
Right.
15 minutes will not be a problem.
Yeah, exactly. If this was, you don't do this for high frequency or for high, any kind of high frequency. Arthur says this is a total loss. I'm not sure what he means by that. Anyways, so like I said, let me put it on you guys. What do you guys use for as government data sources? Because you said, Jeff, money supply.
Now look at M1, M2, M3.
Okay.
And also look at the purchases by the US government and things like that that can affect the market.
Okay, and I know you're a fixed income guy, but what are you primarily looking for with M1 and?
I just like to see how much money's sloshing around the market and like to see what all the numbers are saying. Plus, the main thing I focus on is POMO, which is purchasing operations of the Federal Reserve every day. And they've been doing that for since 2006, and current Q3, Q4 finishes today, so it's important.
And where's your data source from?
No, I just get it from the Federal Reserve website.
Oh, I see. So it's on Fred then, right?
Just put in US purchases of securities, US government purchases of security.
Okay. Okay, purchases. Okay, so I've been studying this stuff in a long time. This is just basic economics. Okay.
Yeah, you can see they've done a lot of purchase, but it's been gradually coming off over a period of time.
Right. And what sort of impact would this sort of show, though? Just from the U.S. government that they're like paying down debt, and it's just more of a confidence factor.
Well, it's not. It's really in the sense of having a look at the data, the net data of what they're actually doing, and basically just keeping an eye. Are they actually injecting more capital into the market every day?
Okay.
Or are they taking money to the market every day? And that affects the equity market. Doesn't necessarily affect the bond market. It's having options and things like that.
Yeah.
And that will affect more money to the market or not.
And how long of positions are you holding, and what kind of trading positions or time horizons?
Well, it will affect, if you're running a book of bonds or whatever,
Yeah.
it's going to affect it, issuance and things like that. But also, every day the market is either shorter money or longer money, right?
Yep.
Has the Federal Reserve matched that balance, or have they injected a little bit more? Because if they inject a little bit more, that's positive for equities, right? As such.
Right. And would this impact market right away when, let's say, the government does an announcement like during the Fed where they're saying they're like, I guess a typical, this would like, I guess the question would be, this is a typical thing where they'd be doing the temper or doing a taper, they're doing an announcement. This is sort of where it's going to show, right?
Yeah, well, it comes out every day basically, and I look at the outright purchases and see what they're doing every day.
Okay.
So just thought it's just that they're always holding up the equity market or manipulating the market.
But this sort of data you cannot use for intraday trading at all, right?
But they come out every day, and knowing the amount they're either injecting or withdrawing every day has an importance on the market.
Okay. But could you then, in your mind, could you use this as an indicator to say, let's say today they do this, but tomorrow this is going to have this type of impact on the market? In other words, use it as an indicator for market direction?
Yes.
Okay. That's good to know. That's what I'm looking for.
POMO, POMO.
Oh, right. Okay. PMO? Okay.
POMO.
PM. Oh, PMMO? That like that? PMMO. Let's see what. Oh. Let's see what she types up. Oh, POMO.
Isn't this the same as the Fed balance sheet, or?
Yes.
So, are we looking at purchasing power parities for?
Let me find the website and I'll put it up on the link. Okay, 1 second.
Okay, yeah, that'd be great. Okay, so Jeff asked maybe we could set up a coding area on GitHub or something. Yeah, we could definitely do that, Jeff. I kind of do that already with my stuff on the website. Yeah, or we could do it on the meetups. That's definitely a good idea. Has anybody else got any contributions they'd like to share with the group? This is sort of helpful for everybody because for me, what I'm looking for with go ahead, Jeff. Okay, there you go. So you're using the New York Fed.
What they're doing every day.
Okay. Okay. There we go. So I see. Okay, there's a 6. So it's not quite every day. Oh, so is it every? So it looks like it's every day then.
Every day they come in with a certain amount they want to buy or sell, right, of treasuries, okay?
Yeah.
They're buying and selling and changing that amount of treasuries in the street and either inject capital into the overall market or reduce the capital.
Right.
When they reduce the capital, that's bearish for equities, right?
Mm-hmm.
When they pump capital, then that's good for equities.
And what time of the day does this information come out? Is it like overnight or?
San Francisco time about 10 something, roughly 9, 10 o'clock in the morning.
9, 10. So it'd be early in the morning then. So what you could do is you could line up an automated process to watch these and then build logic around it. And then
POMO finished today, so you can't really go forward unless the Federal Reserve comes out with more quantity of easing to do.
Okay.
So have you tried running an analysis of correlation between this and the market?
Yes, there is. There's a bit of a correlation. There is, particularly when they do high amounts of it. You find that equities go for a large rally. I've overlaid it and laid back 1 week, right?
Yeah.
So take an equity data, take this data and move it back 1 week, and it has a very good correlation to the market.
And what sort of
the question appears: why doesn't everybody do this?
Well, this is from the bond market, and a lot of equity people don't look at the bond market. Yet I look at the bond market and I know what the equity market's going to do ahead. Therefore, might affect the bond market.
I mean, the hedge funds and the trading firms, they would look at anything if it's positively correlated. It doesn't matter. They would look at the number of people on the street.
Yeah, the hedge funds look closely at this data when it comes out in the morning. Trust me.
So then, shouldn't the arbitrage disappear? I'm thinking that there's some risk premium in there which is not visible.
No, again, it's really just looking at the overall sense of, is the government, which drives the market, are they injecting too much capital, right, which is bullish for stocks because stocks will buy for more capital, or are they taking money away from the punch bowl, right? And this is something that I've been watching all my life because I know as an ex-bond trader, right, keeping an eye on what the Federal is doing with their actual cash is important to underlying positions.
Okay, but it's not a one-stop shop. You need to do other things, right? Because then you would just trade this data and you'd just be rich. I mean,
Well, I watch it very, it's one of the leading things I watch.
Yeah, the other Jeff asked if there's a way to download this as a CSV or something. I would imagine you can only really scrape this manually through a process.
No, the Bloomberg Professional Service has it on their system.
Right. There you go. $1,000 a month if you got it. But I don't see no reason why you can't scrape this. Let me ask you this, Jeff. Is there an upper limit? Let's say this amount, 1.7 billion, would that have a really positive effect on the market for, let's say, the next day or the day of October 21st?
Well, remember, it's normally T plus 3 after it's got to settle, right? So once they buy, right?
Yeah.
It's not going to hit the market till 2 to 3 days after.
Okay.
Right? It's the buy trade, right?
Doesn't the market try to front run this?
Well, once it comes out, they then say, okay, this is going to affect the market, so they start to front run it. Bonds do, particularly, because they understand the way it's going to affect the forward curve. And therefore, what you should be looking at, Brian, is the forward curve of interest rates on the effect of the interest rate market, and it's going to drive your other markets.
So what you're saying, this could take about 2 to 3 days to trickle down into the equity markets to see that effect.
That's correct.
Okay, and as Jeff says here, the other Jeff, bonds or debt on the bond market affects directly the price of currency. So then, obviously, this would affect the global currency on the U.S. pair trading for, I don't know, Great Britain or whatnot, right?
That's correct. They're all interlinked.
That's what I've always assumed. Yeah, I mean, this is sort of stuff I'd like to study just to see what kind of impacts there would be. But they're not going. Let's say this 1.7 billion. They're not directly, obviously, going to go into buying up into the market directly. I'm just sorry. I'm new.
They go to primary dealers, okay, and buy it, but the primary dealer just short those bonds.
Yeah.
They go to institutions and take them, buy them off institutions.
Okay.
Like they might call me, for example, or whatever, and ask, have you got any bonds you want to sell, and blah, blah, blah. But they go to the primary dealers to go and buy those.
Right. Interesting. Yeah, this would be really, really good to have because these are the sort of things I'm looking for market impact, especially. Is there anything else that you know of Jeff, that you would watch, or is this generally pretty well one of the higher level ones that you?
Because for the last, remember, since 2007, the Federal Reserve has been the most active player in the financial markets.
Yeah,
right?
we know that. Yeah.
Got the equity up today. So if you watch what the government's doing in the sense of what their bond purchases are doing
Yeah.
and the bond sales are doing, right, you've got an idea how much they're trying to prop up the market or not.
Right.
Right? And if you go back over history, in the last, say, 2 to 3 months, this is becoming less and less and less of this outright activity in the treasury market, right?
Yeah.
So what they're doing is they're slowly winding themselves out of the market. That's why equity is struggling to surge much at the moment. It's down 10% recently because this is coming to a bit of an end.
Right. So that's what I was. Go ahead. I was just going to ask, where do you see things go? Because I mean, if the market, as Jeff says, you're essentially Bernanke turning on the tap for liquidity pricing, printing U.S. dollars, which we've all known. And as you said, it's coming to an end. Where do you see things going in, let's say, 90 days, 6 months from now, once these numbers are no longer as part of the liquidity in the market? Like, where do you see it going?
Well, take long bonds and get short equities. That's what it smells like, unless it's a fundamental bullish tone of the underlying U.S. economy.
So, right. Okay. Yeah, I mean, how long have you been? How long have you been trading bonds? Like quite a while, right? Like 20 years or?
34 years.
Yeah, there you go. So you've already seen these cycles come and go over the last 30 plus years, right?
I have many of my friends that work in the Treasury of the US government, the Australian Federal Reserve, and other places like that. That's why I'm in touch with this sort of information because. They work with me both in the banks and everything, and then they've gone back to the Federal Reserves to work.
Yeah.
Right? So, again, government does everything, so watch what they do. That's what I say.
Yeah, I agree with that. And obviously, where do you see most of the pops come into play? Into the equity or into the options market?
First of all, hits the equity market first because it's liquidity, but then it tightens up the bond market as well at the exact same time.
Okay.
Right? So this being finished means we've got much more of a pure market again, and equities have been pumped up by that. So equities should be the thing that wobbles a lot,
Right.
right? And bonds should be just normal without any inflation. Well, there is inflation, but it's all fudged, of course, by the Federal Reserve.
Right. So let's say in 6 months' time, like we're going to see the markets pretty well flatline for quite a while once they start no longer pumping these kind of numbers in the market.
Well, you've got to have real earnings. You've got to have real earnings come through, and you've got to have inflation pick up. Which, if that happens, bonds will go higher in yield, and equities will come lower, right? But again, the Federal Reserve believes that the equity market's on a solid footing, or the US economy's on a solid footing. Otherwise, they won't be turning off the spigot, right?
Yep.
And if they're wrong, right? So if they're wrong, then equities will collapse another 10% or so, and bonds will continue to rally.
Well, from your experience, do you see this actually working over the last, let's say, actually six years, really?
Yeah, it's been working over the last 6 years, right? I've been watching. I did some work for many people, and I built up a graph of exactly this line on that with exactly the underlying stock market, and there was a very, very good relationship of it. So during the summer months, when the equity market does nothing, the Federal Reserve's typically not in the market, right?
Right.
They come back up summer, and then normally up they come again and start doing their activity again. And sure enough, the equity market goes for another run.
Well, because like typically, if October's showing, let's say 1 to 1.7 billion a day, right?
Yep.
So let's say if you roll back to September when the good old days were happening before the markets were tanking, are these numbers the same each day typically?
Yeah, they're much lower down that period. So the Fed wasn't in the market trying to support the market.
Right.
They're only certain amounts, right?
Yeah.
Yeah, you got the big player in the market, the biggest player in the market, not in actively in the equity market. There's reports all over the place. It's already been documented that the Federal Reserve is very active in the mini futures contracts.
Right.
Well, yeah, they are. Obviously, if they know they're going to buy bonds, right, or sell bonds, and sell bonds puts liquidity back into the market, then what they're going to do is inject the capital into the market.
But won't this greatly affect the U.S. debt level over the next, let's say, 5-10 years because the debt level's so high that they've, artificially...
No, the bond market gets scared mostly of inflation. That's what the bond market really gets scared of. And we keep a close eye on what they're doing in the purchases and the selling, but we keep a close eye on inflation.
Well, what about with deflation? What's happening in Europe right now? I mean, that's way scarier than inflation.
Well, that's dampening down some of the inflation here. But you go out and most people do shopping every week as a family, right? There's plenty of food inflation around, and there's plenty of other food inflation and stuff. So, it's a bit of a balance. But from the government official view, right? Inflation is still low, and that's why bonds have got a bit of a beat to it at the moment.
Right. No, I understand that. But the thing, what's happening, I've talked to a couple of people in Spain. I mean, people aren't going out and buying things right now because they know the next day they can get it cheaper. So there's no hardly any... Right.
Economies, when they go down like that, there's no demand around. It has to be deflationary, right?
Right.
So remember, those deflationary numbers are monthly, right? And this data here is daily. And your monthly stuff is typically a lagging indicator.
Yeah. Yeah.
Right? So just be careful. It's good to watch what the number comes in. Don't get me wrong. I was looking at inflation and CPI, PPI, retail sales, all those sort of things. But just be mindful of things that could actually upset your position during the course of the day. And this is one of them. Has been over the last 6 years.
Right. Interesting. Anybody have any questions for Jeff? I don't think you'll get access to a guy like this who's got this kind of experience. Anybody get any questions? So yeah, we've already talked about Jeff's last comment. Essentially, Bernanke turning on the tap of liquidity, printing U.S. dollars. Doesn't look like anyone's got any questions on that. What other sort of things do people look for in the U.S. markets from government data and that they think that will affect the markets. This is my list right here. Obviously the PMI, the Michigan consumer sentiment, building permits, housing starts, durable, on what things are manufactured. And as I mentioned before, 7 o'clock, what I'm looking for is to build out data that you can use to forecast, because these are all leading indicators, so that you can use these to forecast market direction based upon different sectors. Obviously, let's say transports, defense, so on and so forth, consumer, housing, and those indirectly, I should say directly, can impact the equity markets. That's what I'm looking for. That's why I have this presentation. George just put up a really good calendar here. This is good to know, George. Thanks. But in the meantime, is anybody using anything else that I've not mentioned there? Just so people know, I think what George has put here is very important. Obviously, you can use this because these sort of things will greatly impact the markets. So let's see what's coming up. FOMC meetings, reserve settlement, these sort of things will greatly affect. Obviously, this will affect the market, petroleum. Thanks a lot, George. That's really useful. Anybody else got any little tidbits and nuggets that they could share? Anybody? Or we covered everything? I think these calendars are really good. Does anybody use these sort of things? It'd be really good if there was an API just to be able to see these things, because I do know a lot of automated processes do shut down when certain announcements come down, especially like when Janet Yellen
Well,
speaks.
I download them manually, but for example, Oenda, a forex broker, has an API to get this kind of calendar.
Oh, do they?
So they serve a JSON file which you can look and get the events in them. And they even annotate it, like it's a big impact or less impact.
That's on Oanda, eh?
Yes.
And that's what, economic indicators?
Pretty much, I mean, they pretty much
There we
use
go.
the same source. So
And that you can download that through an API, eh?
yeah, they have an API and you can get this event.
And anybody can access that, or do you have to be registered, or?
You have to have a demo account, for example, with them.
Really, eh? That's really good to know. I think maybe this one. Because I don't think Yahoo has any type of indicators at all. Anyways, I'll look into that.
But just like Bloomberg, I'm directly from the source, from Econoday, so.
Okay, that's good to know. Okay, Jeff asked for the other Jeff, does this apply to other countries? Are these pages like for other countries? So for you, Jeff, do you know of any other type of government data you can get for, I don't know, Canada, Australia,
ECB
the ECB, you said?
ECB also has
Yeah.
a not corporations page, but I'd have to go find it.
Actually, you know what? No need. I've got something here that I already mentioned in the presentation. This one right here. I just put the link in because you can directly download the economic and affairs for all of Europe, all the countries listed in the EC. I know that. Jeff says he uses the Bloomberg Economic Indicator. It's good to know. Hang on here. Let me just pull up this other one here, the bar charts. I've heard of this site, but I've never really used it. There you go. Yeah, you could easily scrape this. And I'm just trying to see if there's any other missed comments here. Hang on here. So we got forecast also. Okay. Forex Factory, calendar. Okay, there's some good ones. I'll make sure I'll grab these links and repost them. Okay, so we've got Europe covered here. Or what is it? right here. Anybody else have any other stats that they can use or that they've used for Europe at all? There's a good one here with Quandel. You can just use these codes as well for Eurostat. You want me to put them in? I'll just put them all in. We got CFTC, another one. I appreciate everyone listing these. All right, so commodity futures. The CFTC. That's going to be really good too. Wow. Thanks a lot for that, George. Forecast. We got Jeff as well. Let me just check these all out. Wow. Okay, these look pretty good. Okay, so we've got quite a lot here. Is there anything else I'm missing here? Because we've covered U.S., Europe. Has anyone ever done China at all? Gets really quiet when China's mentioned. Anybody interested in China? Because I know there's one that you can use. It's HSBC one. Let me pull that one up. HSBC China PMI. We should talk about China in a second here. Not sure which one it is, but the reason you use HSBC is because the ones coming out from the Chinese government are questionable. But here's the one for the PMI for China and all the other emerging markets. So a lot of people do use HSBC for that. Anybody use anything else coming out of China at all? But from my understanding, a lot of people, I said, trust the HSBC one. I can put the link in there for you if you want. So we've covered Europe, US, China. Anybody else interested in any other countries at all or regions? Anybody at all? The money laundering book from Mark. I can't say anything on that. George is interested in Australia. I'm not sure anything on Australia, to be honest. Let me ask you this: does anybody trade? Here we go. BCA Research. Okay, looks like George's wealth of knowledge tonight. I appreciate that, George. This is independent research investment Euro area. It's good to know. What was I going to ask? Is anybody trading Canada or Australia at the moment, especially equities?
Australia.
Okay, Jeff. I'm going to assume that's you, Jeff, right?
Yeah.
Let me ask you: would you say there is a lot of liquidity in Australia at all, in terms of particular?
Just a very liquid futures contracts, both the equity and also the 3 and 10 year bond contract, very liquid.
Okay.
Very liquid current Australian dollar, which I trade, and very liquid stock market as well.
So, if I was to put any, like, do they? Here's my dilemma. If I'm going to look at, I'm gonna pull up Yahoo Finance for example. This is one of my tests on equity data on liquidity. So let's say if I want to trade Rio Tinto. Rio Tinto is Australian, right? That was good. Rio Tinto.
Yes.
Okay, good.
They're listed in London.
Oh, they're out of London. No, I'm interested in. Give me a large Australian stock.
BHP.
Oh, that's the one I'm thinking of. Yeah, that's it. BHP built. I always get the two confused. Okay, so let's say if I pull up these guys, this is what I'm looking for. Okay, I'm looking for EPS data through my Yahoo, and then also what I'm looking for is options. So yeah, so they have options, which is good. So this is just my test of two things: demand and liquidity.
Yeah, you look at the exchange of that's BHP listed in New York. That's why.
Okay.
They have dual listings both in Australia and also in New York.
Okay. Okay.
Just in my
Yeah, that's good to know. Because I'm really new to all this. Just trying to share whoever wants to know what I'm learning.
Australian companies that are very big end up dual listing both on the local market and also the US market. And when
Yeah,
you buy the share, you're buying what's called an ADR.
Right. Okay. So Jeff says, how about government data for Latin America, Africa? Frontier market. I'm not sure on that, Jeff. From my point of view, anybody have any info on frontier markets at all? The problem for me is just transparency. I have enough problems with China. That's why I'm just going to focus on UK and US for trading equity directly. Anybody else?
Go and check Bloomberg for South African bond market, for example.
Okay.
Brazil also got bond market, things like that.
Okay. Yeah, no, I know the app is excellent for that sort of thing. The Bloomberg app for whatever Android or mobile. So I don't know, South Africa. Did you know the name of the bond for?
Just Bloomberg app, not the BBC app.
Oh, I'm sorry. Yeah. Sorry about that. Yeah. Okay, so let's say if I'm looking for South African bond, let's say.
Correct, South African bond market.
Okay. There you go. No, that was an ad. Yeah, I do. That is a good point, Jeff. Yeah, you could definitely look it up on the Bloomberg apps. I just don't know how you can talk to it through an automated process.
Yeah.
I mean,
one of the problems, but again, liquidity, right? And can you actually? Who's going to be custodian for you in America if you buy the bond in that country?
Right. Like I do know you can get access to virtually anything through iKey fee. You just got to pay for it. I'm not right now using.
Yeah.
Go ahead. Sorry, Jeff. Go ahead.
iKey Feed's a very good company. I've got some some people using that I know. So.
No, I've used them for many years. I find them great, and their APIs are awesome for whatever language you want to use. So you just gotta pay for it. So that might be another area you can look into, Jeff. Anybody got any questions so far? I'm really hoping this helps people out. What about Hong Kong, known as a safe, reputed gateway to China? Mark, we've already talked about that with the HSBC, this one right here. I don't know if I put this in the link or into the chat box. I just put, but here you can get China right here. You can download a PDF and then parse through that. That might be a way to do it if you're using an automated process. Anybody else? Who's got any questions? Shalom, you got any questions? Or
no, I think I said everything I needed to say at the beginning. We started recording. I already put out all the links that I had before, so I don't have anything else to add.
Yeah. Jeff asked, does anyone use World Bank or IMF data? I do know you can go to Quandel for that. I'm not sure what you're specifically looking for. Like they have all kinds of statistical data. But like I said, the only markets I care about right now are UK and US. So I think we've got a good list for even myself to look into with this. Does anybody use any government data for Forex? Because I think that's another area I'm going to be looking into. Yes, Jeff. Go ahead, Jeff.
I look at the World Bank data and some IMF data just for big macro type of stuff. And when it comes to Forex data, I just look at basically a lot of the primary leading indicators, right? Because it affects the FX market first, followed by the bond market and the currency market. So it's always leading stuff I look at, you know.
So what sort
of money supply.
So what sort of stuff would I point out to look for, like for currencies that will impact, let's say, you know, classic U.S. dollar, British pound. What sort of
if you look at macro factors, big macro factors,
yeah,
so the macro indicators, like what's going on with you know, imports and exports, what's happening with the current account, what's happening with things like you know, inflation, right? So macro factors affecting foreign exchange.
okay.
The macro factors affecting foreign exchange. You'll get a list of the whole lot.
Okay, because George just gave us another one. Let me just pull up China, let's say, for instance. What sort of stuff we can find here?
So most of the people there are, most of the guys that trade foreign exchange are known as macro hedge fund managers.
Okay. I guess so because like I said, if I look under Quandel, is good for this, I would imagine. I don't know. I don't know. Let's say if I look up China, let's say, because this is sort of interesting thing that I'm looking for that can greatly affect the markets, Jeff.
Yeah, it is. A lot of the macro factors that come out, right?
Yeah.
Push the currency one way or another. I'm not going to go in 2 minutes, but that I should call with Australia. But you know, all the stuff you're looking in your economic stuff, particularly leading indicators, that's what drives currencies. But remember, one of the biggest things that drives currencies is what's called the current account in the country.
Right.
Because the import and export, remember, every time an export's done, you know, that brings US dollars into the country. Every time imports are done, Australian dollars go out of Australia, right? So that affects the currency. So the current account in particular, right, affects currency.
Okay, so again, how long would it take usually after an announcement it would impact the currency market, or that would be seen in the currency?
Per second.
Right down to, okay, so let's say, okay, currency reserves, I guess that would be one of them, or it could have an impact.
Yeah.
Okay. Well, there you go. I think Quandel can be a good resource for this sort of thing. You said you got to go, Jeff?
I've got to go. I've got to call Australia. But thanks, everybody. I've got to go. Bye.
Okay, no problem. Thanks a lot, Jeff. Wow, that was pretty useful. Looks like George has got a lot of stuff he's listed here. Let me ask you, is this being useful for everybody out here? I think this is fantastic to get this sort of insight for data that can greatly impact the next day. Anybody else think they have any little gold nuggets that they could share to the group? Because I think Quandel will be very useful for this sort of thing to impact Forex. Anybody else? I think I've talked quite a bit about Quandel. I've talked about what I'm looking at from the U.S. side. Is anybody else using anything else from anywhere government related that they think can be used for forecasting, for market direction, or have some kind of relationship, as Gigi would say, has. So Jeff says the Quandel is the go-to place for
I've been
data.
doing another thing.
Say it again, sorry.
Hello. I've been doing another thing. I mean, not downloading the government data, but downloading bank predictions. So very a large number of banks.
Yeah.
So put out weekly or daily PDFs which just say we think the stock market will go down today. We think the euro dollar will go up, stuff like this.
Okay.
So I've been downloading like 4 years of this kind of PDFs from like 5 banks.
Yeah.
And the idea is to look at what they predicted, how the market reacted, and to see if you can find a bank which has accurate predictions.
So give me an example like that you would look at.
So let me.
Barclays.
Excuse me.
Barclays would be one of them, I'd imagine, or.
Here is this link from Citibank, for example.
Okay.
Each week they say their FX forecast. UBS is another bank. Scotia Bank is it's less known.
Okay.
Danske Bank is very known in the forex markets for this kind of research. So if you scroll down one or two pages, you'll see their predictions for the few currencies.
Mm-hmm.
And
I see.
I didn't. The problem is that I didn't got to the part where I start analyzing this data, but I do have like years of this kind of years.
Wow. And do you find there is a correlation for forex with this sort of thing?
Like I said, I didn't research them yet, but there was another bank, UBS, which also published like an HTML, which has some very very simple prediction, like up, down, or neutral for each day.
Okay.
So I actually studied that data for currencies.
Yeah.
And the problem is that it was not profitable. So on some currencies, in some periods, you win money by following their prediction. On others, you lose. Overall, if you follow all their predictions, you would pretty much be around zero. So you neither win nor lose.
Right.
But they also have some very profitable periods, like when you tripled your account or stuff like that.
Yeah.
But then you would lose money. So.
This is quite
So
interesting.
this is another thing to do, to actually search for prediction. And there is another. Let me show you.
I guess from the qualitative, this would be very useful as well, though.
The thing is that it's easy to test. So they say in 3 months it will go there. So it's easy to extract this data and to analyze if they are right or wrong. So
Right.
you don't look at the text, you just look at the numbers they predict.
Okay.
So-
This chart right here.
Exactly. You see 1 month, 3 months, 1 year, and you look for a few years of this kind of prediction, and you see do they have a particular currency in which they are right or.
Yeah. I mean,
And there was another website which each week they had something like 35 analysts to predict the forex market, and you can download that data.
Okay.
So let me show you the website. So I've downloaded like the last 4 years of this data,
right.
but also I didn't get to the part where I started to analyze because I have some other stuff to do.
Yeah.
But if you can look at this page, you can see that there is like 35 banks analysts, which
Yeah.
they predict up, down, sideways,
Yeah.
and you can download this data like going back to 2010. Click on the continue to FX Street.
Which one? Right here.
Just at the start of the page, there's a button. Continue.
Oh, right. Okay. I see. Okay.
So you can see this table with predictions. So like I said, very simple, up, down, sideways. You don't have to do very complicated stuff to get it
Yeah.
out.
Yeah.
And you can look to see if there is some particular analyst which is very good at on some particular currency.
Right.
But I didn't get to do this part yet.
Well, Jeff just suggested a good piece of software. It looks like he's using PDF to text.
Yes, there are a lot of
Okay.
software you can extract data from a PDF. But in this case, it's the HTML file, so it's even simpler.
Right.
So
Mark.
this is not directly government data, but it's predictions from the banks in the market.
Okay. Well, it looks like someone's got a question for you, Gigi. What database are you using from Mark?
I'm not. I'm using an SQLite for storing not downloaded data, but metadata about the data I've downloaded. So each time I download this page, I store in that database the URL, the time I downloaded it, the size of the data, and where on disk is that data stored in a zip file.
Yeah.
So I'm not directly storing the data in a database.
Okay, but you haven't done any research or anything to see the relationships on forecasting potential.
From my experience, they are not pretty good. So,
Yeah.
but there might be a few of them which are very good. And the other problem is that this is weekly prediction. So even if you put like 4 years, you will have something like 200 points, which is pretty low. So
Right.
it's harder to get a very good statistical significance out of this data.
Yeah.
I mean, it's lower frequency, so. But I will do it one day. I will analyze it. But
Well-
if anybody is attracted to this kind of stuff, it's very easy to do. So you just download this data. You can go back.
Well, it's no different than doing like I said, I've used IQ Feed where you can just download data and then
Yes,
store
but the difference is that these are actually predictions. So they predict something. They don't. It's not data. It's prediction. So
Right.
they could use the most complicated prediction algorithm in the world, and a team like of 10 people can predict that number. You just get the final number. So you get to use all their experience and whatever method is technical, fundamental, quant, whatever.
Yeah.
So you can try to search to see is one of them very, very good at this job.
Interesting. Very interesting. Anybody got any questions for anybody or comments? This is quite good. As usual, it can be very overwhelming. Anybody else? I mean, with Jeff, who just left, he's doing fixed income. I don't know if anybody knows, but Larry Sumner said there was a huge pop 2 weeks ago for equivalent of a flash crash for bonds where it went up 9% in an hour. I mean, those sort of pops are quite mind-blowing if you can find ways to listen to that type of data and then respond to it. Anybody ever ventured into that space?
More likely to be accidents.
Well, yeah, I guess. But like I said, I'm looking for relationships to see. I mean, with what Jeff was saying about the New York Fed and about bond data, how it can impact the next day for market direction. Stuff like that. That's what I'm kind of looking for. Mark says, if an academic says something is going to happen, you should probably do the opposite. Yeah. That's very true. I agree with that.
Well, if it were that easy, we will all be rich. I think the problem is that even the opposite doesn't work always. Like
No,
George Soros says, show me somebody which always loses money and I'll hire him for $1 million.
Oh, I agree with it. But there's also that contrarian approach to investing and trading, which can be true.
But you have to time the market review. So a lot of guys went bankrupt shorting the trend ball.
This is true, but that's where the statistical and risk assessments come into play. There's a lot of factors. I mean, we've talked about in the last few weeks what people can use to measure when things hit the trough. I guess Jeff.
Yes, that was my idea. So measuring how good they are, and then yes.
Yeah. Well, the thing is, I also believe that, like, if you're gonna follow what other people say, I mean, that's a good way of losing your shirt.
Well, one particular stuff which I really liked about this chart, that about contrarian. So there was the euro dollar peaked like 2-3 months ago, and absolutely this page was red from. It was bullish from. It was red before peaking. So like a lot of time before peaking, it was red. So absolutely everybody was bearish, and of course the euro dollar continued to go up. So. So I really liked. I was so sure that it will go up just because everybody is bearish on it. So I'm also trying to look at this kind of stuff. So only if everybody is like going into one direct, predict something, then to see if the other stuff is more likely to happen.
Yeah, the opposite. I mean,
so basically you can filter this data in various ways, like see if in certain months they are more accurate or at certain times they are more accurate, so you don't have to use all of it.
Right. You don't have to answer this question, but just say yes or no. From your research, Gigi, have you found pretty well certain patterns that consistently work?
Yes, and these are the ones which I am trying to automate.
Okay.
And they have fundamental reasons. It's liquidity provisioning. So big guys want to get into the market and they can't because they are very big. So they enter in portions. So they enter 1 billion today, 1 billion tomorrow, stuff like that. So after they enter 1 billion, the market has to retrace a little bit, so liquidity reappears, and the market goes against their move for sometimes, and then they enter it again. So this kind of stuff is predictable.
So that's basically what you're doing is you have processes that will watch data and then respond to it.
Yes, but this is a very general description. I mean, everybody does this. So
yeah.
I'm looking for more specific kind of data. Like I'm trying to detect the big moves. So basically, when liquidity disappears from the market.
But what type of data are you looking for that activity or
It's
that
price data. And now I'm starting to look at level 2 data, which I'm just starting to collect. So
Yeah.
I have a few ideas with how to do this.
Right. But as you said, like you've provided pretty well all the data that you could use for predictability.
There's data which is also more harder to interpret, like sentiment data or like reading news data.
Yeah.
These are there are people which are doing this, but it's more complicated. So
Yeah. Just so you know,
there are algorithms which, for example, search Google News to see what news comes up or what comes up on Twitter.
yeah. I mean, what Twitter accounts do you follow? Like Seeking Alpha, well, not Seeking Alpha, but any of the.
I have like 2 accounts which I follow. The Business Insider Finance account, which is called Cluster Stock.
Yeah.
FT Alpha, so the Financial Times market news.
Oh, I see. Okay, and that's pretty consistent. Like that's something you definitely would
No,
trust.
I like to. I mean, I need to know the big news that happen. I don't need to know every news. I need to know the big news.
Yeah.
So in these 2 accounts, you can get if there's a scandal in some stock, like Apple, like the big stocks, or if there's something happening in the currency market, you can see it on this.
Yeah. Yeah. No, I've
I'm
thought.
not interested in like in every little piece of news, but I want to see if there is a big news happening. I want to know it.
Yeah. Well, Mark says that BI's full of rumor mongering.
Yes, it is, but I mean, all the big news started as rumors, so if you need to know them first. But this is BI Finance. I'm not sure if you are referring to them.
He probably is. Well, that's why one of the things I'm literally on following Twitter is just if you can trust the source that you're going to follow. But if you say FT would be a good one, then FT is a good one, I imagine. Anybody else?
I also I follow accounts which post less than 30 tweets per day, so I can't do more than 30. So
okay.
So I do have real-time news feeds from Wenda, for example, and they have something like 1,000 pieces of news per day, but I can't follow that. So.
Yeah, I know IQ feeds the same way. That you can.
They are nice, for example, that when a news event happens, like a NFP or a PMC, you can log in like 1 minute into their news account, and when the news will hit, you'll get like 10 headlines in the same second that the news hits, so you can react instantly, for example. And this is what I do sometimes. If there is some very big event happening, like a Fed news press, I will just log in to see just the news that it hits. So, if I'm particularly concerned.
So how do you logically program the software? Are you if it says one type of thing in the keyword, you do this, and then if it's something else, you do that?
I'm not actually trading on this, but I was thinking these days that from time to time, I mean, each month, like the central banks of various currencies, they raise or cut rates, and the market expects or not a raise or something like that. So I was thinking about doing an algorithm which just looks for the words cuts or raises in the news headline, which will follow in the next seconds, and also it will know the expectancy of the market, what the market expects, and if it's a difference, if the central bank surprises, you just buy or sell that currency.
Yeah.
So I was thinking about this. This would be very easy to use because I already have access to the news feed. I can get the news like in less than 1 second after it happens. So I could just hop on the first minute of the reaction.
Right. Yeah, George just gave us Canadians the Statistics Canada. I don't know. Another useful site. Thanks, George. I don't really trade Canada. I just don't find it's all that liquid. Anybody else got any ideas at all? Any thoughts? And we're just over an hour right now. Nope. Nobody's got anything to add? I mean, I've shared everything I can as much as I can. Is anybody trading out of China at all? I'm just interested to see what people think of the Chinese market potential with it.
They are pretty much, I mean, where can you trade them? So I can trade their currency, but that's pretty much it.
Right. No, I've heard that you can trade through Hong Kong as a proxy, Taiwan as a proxy.
Yeah, but that's very expensive for a retailer guy. Like you need to open a browser there if it accepts you, or I don't know.
Yeah.
This is easy for like a big institution. They can go and open a company there and trade to them. But for a retailer, I think it's pretty hard.
Yeah, I think so. Well, I personally don't trust the data coming out of China anyways, so it's either manipulated or is it a lot of truth. So yeah, George just provided this report on the Globe and Mail stuff. Anybody else got any ideas? I don't think George can talk. I think we got, I know some people here. Daniel, hey Daniel, Greg, Mark, two Marks, Shalom, and Tony. Anybody else? Mark added some Chinese ETFs to trade on Singapore SGX. That's true. I think you can probably get SGX through other ETFs as well. But I like to be a little more active than through an ETF, that's for sure. More interested in direct equity, direct stocks. Does anybody actively trade in China though? Or even at least trust China? Give me a yes if you do. I don't think there'd be many, but didn't think so. Anybody else got any questions at all? Comments? I think Shalom finds it he doesn't have any new ideas. So we've talked about frontier markets, Europe, US, Canada. We've talked about FX. Anybody find anything useful for the futures market, specifically agriculture, commodity? I think I saw one commodity list link in there somewhere. I didn't pay. It was a CFTC from George.
That's pretty much to go against the big guys in the commodity market. So I know that, for example, some hedge funds are using infrared seeing helicopters to measure how much oil is in the oil reserves. So so they can predict the number before it's official.
Yeah. Show them.
So if they have helicopters with infrared data, I mean, if they need that, it's pretty clear. Or Goldman Sachs, for example, has its own weather stations in Brazil, so that they know how the temperature will be there, because it's very important for the coffee production.
Right. That's a good example. The problem is that we're obviously looking for public information. I mean, I can imagine Goldman Sachs will put a lot of investment.
This is why I don't quite believe that there are actually any leading indicators at all, because if they need to use helicopters to make money, I'm pretty sure that the data you can find on the net will not be used.
Yeah, but again, it depends upon your holding position as well. I mean, if you're holding for, let's say, 10 minutes, yeah, of course that what you just said will be true. But if you're just holding a position for like a couple of months or even a couple of weeks, I would think that just for market direction, it can be useful. But I mean, how long are you going to hold your positions for, Gigi? Pretty well a couple of minutes, right?
No, it will be in the hours, but
yeah,
under 1 day for certain.
Yeah, for sure. I'm starting out to be more passive. So
the problem with passive investing is that it takes a very long time to know if your system works. So.
Right. Yeah, I agree. Mark says, then again, the margins would be reduced to pay for those helicopters. Same goes for physical commodity trades with regards to leasing costs for tankers during contango. What's your thoughts of that, Gigi?
I think I understand the second part. Yes, but they are making money for sure using this method. So if you are to make money after them, I'm not sure if it's possible. Mm-hmm. So because there will be the one trading the move, so you'll be trading the after move. So when the information is gone in the market, so you'll be trading on no information. Right?
Pretty well, yeah. I mean, if Mark wants to talk, we can talk. Mark, it's, but it's not as glamorous as the media propaganda makes it out to be. He's right there.
Or for example, if there's a retailer like I don't know, Walmart, some other people are using satellites to see how many cars are parking each day into their parking lots to estimate how many consumers they will have before Walmart publishes their sales numbers. So when Walmart will make public their sales numbers, these guys already knew from like a few weeks ago how many customers they have. or others are going to retail store, for example, for software, which in the past sells boxes in the software store. They would go and count how many boxes, how many Xboxes, for example, they saw at each retailer, and they will try to estimate how many Xboxes Microsoft sold, for example, by looking at the actual physical stock in the magazine.
Yeah, they go to that level, that's for sure. But again, like I guess it depends on the time you're holding, how long you're holding your positions for. So.
Yes, but this is, I mean, Microsoft reports earnings like every quarter, so this is like 3 months.
Right.
I mean, it's not daily. So.
No, I know.
But they want to take a position before the official announcement.
Yeah.
They will make money. They will close the position after the official announcement, and then the market will be left to trade on its own.
Yeah. No, I agree. Anybody else got any comments at all? Because one area I'm looking at is definitely futures.
For example, regarding public information, some people are. So each public listed company needs from time to time to submit the reports, financial reports to the government. Fillings, S1 fillings, F1 fillings, this kind of stuff. And these are public. You can download them from the internet.
Yeah.
And there are people which devise algorithms, so they measured what kind of words in the statements relate to the company, and they discovered that if some words appear, it's more likely for that stock to go down, and if other words appear, it's more likely for the stock to go up. Or other kind of relations, like there are some kinds of words which are associated with fraud.
Yeah.
So when those words appeared in a large number in a statement, it was pretty sure that company was doing something illegal,
right,
and it might be busted in the future. So they were also using this to detect companies which might go under. So
the problem is once the sheep will catch on to these sort of things, then obviously they change some methodology, and the sheep are screwed basically.
Yes.
So for me, it's just not a smart way of doing things. Anybody else got any comments or any other tips or tips or I can't remember tips or tips or I think this is another good session.
What Mark is saying is exactly what I talked about. When they are massaging their financials, they tend to use certain words in their massage financial because you have to be careful not to go into the illegal side.
Yeah.
So some people detected what those words are, and they can be pretty sure that report is massage, for example.
Yeah, I mean, I know what Jeff's saying about natural language processing with the machine learning. I think that probably has a short-term way of doing things, NLM. But like I said, I think over time the source could change, and then you're basically screwed. I don't know. It's just I've read people do machine learning and others tried it and it doesn't work for them. If Jeff, are you able to talk at all? Because I'd be interested to hear what your views are on that. Let me ask you, Jeff or Mark, have you guys used any public release data for market direction or forecasting with? Not sure if they got that. Oh, Jeff can't talk. Okay. Have you guys used machine learning for using public data? Because I'm more interested in hearing what the results are, if it actually works or not. So it's a big investment of time. Gigi, have you tried machine learning at all?
I had some ideas, but I didn't get to them. So I do have some ideas into why we incorporate like price data, option data, positioning data. So because there are also the side dimensional, so there are all kinds of different kinds of data. I will need to do some machine learning on that.
Do you find that you could put a lot of faith into the methodology of let's say, call it machine learning?
Machine learning certainly works in the real world. I mean, pretty much Google's spam filtering is machine learning. The Google self-driving car is machine learning. So it certainly works. The problem is in the financial markets, which are more complicated. But there are guys which are using it and they are making lots of money. So yeah. Okay. I mean, it's very hard for a beginner to do this. So if you are a beginner and you just are reading a machine learning book, you're certainly not going to make money. But
Yeah.
if you are very good at this, you probably will.
Yeah, I think you have to have a good study in it. Is it something
But the
you?
beauty of this is that you can just put the data into the algorithm. So I mean, today is very easy. I don't know about MATLAB, but Python, for example, you just give it a vector of data. You say to it classify it, and it will classify it for predict, and it will predict it for you. And then you can just look: is the prediction good for anything or not? You can backtest the prediction.
Yeah.
And if you find something, you don't have to know the algorithm, just using the data. So
Yeah.
just like you would use any kind of other prediction.
Yeah. Jeff
So
said.
the fact that it's yes.
Go ahead. Continue, Gigi.
No, I wanted to say that the fact that the prediction is made by a machine learning algorithm has no importance. So, because if you have a backtesting methodology to test predictions, you don't care who predicted that. Was it an analyst from a website like I showed you? Was it your machine learning algorithm? You just test the prediction. And if you find something which works, you'll use it.
Right. So Jeff says he's currently reading Lenin Kwan's book to exactly what he's looking for, and he says thanks for sharing the book. Let me ask you, Jeff, how do you see it working for you? This book? I'm just trying to get people to convince me of machine learning myself.
What is London's Quant's book?
I can't remember it. Yeah. Neuroevolution, his book.
Okay.
Mark says not that many people are using ML in the markets over fitting concerns. LQ does, but not completely. Is partially discretionary and needs more medium frequency. Yeah, I think you are right on the. So George asked for the book in the chat. Yes, it's Future or Everything AI. So is that the name of the book, Jeff? Is Neuroevolution? I can't remember the exact book. I remember he mentioned one of them. If this is it. Have you found it, Gigi, at all?
Yes, but I'm not sure if it's this one.
If you could put the link in, well, I could try to do a search on. Oh, here we are.
You can look and confirm or not if it's this book.
Yeah, well, that's right from Jeff. That's who mentioned it.
So it's Handbook to Neural Revolution.
Yeah, we got it. That's the one. How's
Okay.
he's using Erlang, yeah. Do you have a lot of confidence in it, Jeff? I mean, obviously you're reading it. Is it something that you are want to put a lot of time into and you have a lot of faith in it? And the other question is, where do you get the data from? Are you using public data, like data that you get through a feed like IQ feed or something? Based on faith. Ooh. That's a lot of work for faith. What's your view, Gigi?
About this book or what?
Yeah, well, what he's saying here, he's reading the book. I'm not sure his background, but I remember this book that was mentioned by Lenin Kwan. I'm sure it works, but you'd have to be pretty advanced to really pick up on this stuff. And the other question is where the data comes from.
Well, I mean, you can use market data or different kinds of data.
Right, okay.
So since I know, for example, machine learning is very good at finding patterns or correlations, like what correlates to what.
Right.
And the thing is that I have like very large dimension data. I have price data, I have order positioning data, I have like spatial data, like I mark with an algorithm special points in time. And I want to see, do some of these correlate? Are they related together? And machine learning is very good at this kind of stuff.
Right.
So this is why I want to use it, because I could display it in a big matrix or a three-dimensional way, but I would have to look it manually for the correlation. The algorithm can find it for you. So.
Right. And what about parallelizing? I think is this one of your big priorities for what you're doing, Gigi?
Well, I haven't hit computation limits yet, so.
Oh wow.
I will think about this when I get there.
Okay. But like.
I mean, there's a classical way. You start. For example, in Python, then if it's bad, you go to C++. If it's still not enough, you may try the GPU. If it's still not enough, you might try multiple machines. So it's the classic. But from what I heard, there are very, very few trading institutions in the world which are limited by computation. So
Right.
computation is very easy today.
Right. And now for you in this study and research, is this one of the big ones for you, like that you're focusing on day to day?
No, because I have some other stuff to do before this.
Okay.
But I do have like this classification problem that I need to solve. So I have some prices and I have some events, and I want to see if some events correlate to some movements.
Right.
So I will need to do this because that's one of my main idea in trading. So.
Well, here's what Mark's saying: machine learning for useful for classification such as computer vision, facial recognition, news analysis. Not so much at determining trends. There is a lower.
I don't agree completely with what he said. So
Yeah.
there are some patterns, but I mean, the trick is not to use all the data. So you need to use only some specific data. So
I think we got another.
you have to filter, like they call. You have to build the features first. You need to filter the data a little bit before. Don't just dump the data into the algorithm.
This is beyond me. For me right now, it's not a priority, but George just gave us this link. If you guys want to take a look at it.
Well, this is very. I mean, this is like a very. It's like an architecture view of how the trading algorithm is built,
Yeah.
but this is more related to software engineering than is related to trading.
Right. Yeah. Mark says, right, but is everyone actually using that in production?
Well, I know for a fact. I mean, a lot of hedge funds are saying that they are using it in production, so they could be lying. But then again, they have some prospect to. I mean, if they lie, you can sue them. So if you are an investor.
Yeah.
So if they say that they are using machine learning for trading, I kind of believe them. And it makes sense because I know that for what I'm trying to do, I will need machine learning. So
Yeah, I mean, I've talked to Ernie Chan about this, and he's not sold on it either. I mean, I'm not saying I wouldn't use it. I would rather
yes,
just.
but the thing is that if you don't use it, it doesn't mean that it doesn't work. So if you are making money using like moving average crossover,
Yeah, I
that
understand.
doesn't mean that the other guy can't make it by following
No,
the move, for example.
I agree. I agree.
So if you can't find public information on like how to use machine learning for trading, it doesn't mean that it doesn't work. It's just that you don't know how
Right.
to use it. So, or that information is not public.
But here's Mark says, Twitter hedge fund blew up, and many of those don't beat the market.
Well, if you look at the statistic, pretty much all the hedge funds don't beat the market. So they pretty much all go under after 5 years.
Yeah, I was just
because the thing is that hedge funds make money from the fees, not from the trading.
Yeah, and those are already getting questioned in the average life.
Like, on the other hand, if you look at the proprietary firms like Renaissance Stock or the closed hedge funds, they make money. So
yeah. Well, I read that the average lifetime of a hedge fund's 3.5 years.
yes, the public ones. And another interesting stuff. Some guy said, like, I think it was the Renaissance guys, they said that they don't even talk about models which don't work anymore because they want the competition to waste their time investigating models which don't work anymore. So they don't talk about. Some guy asked them, can you please tell us some example model which works like 3 years ago but it's not profitable today? They said no. We would help our competition by letting them know what not to test. So
yeah.
So this is why I don't find information on what they are doing or not doing.
Yeah, that's why I always say it's always good to do your own research and be able to confirm your own results and that sort of thing. I think we've pretty well exhausted the discussion of public data. Anybody else? Looks like we've talked pretty good about machine learning. You want to do a topic one night, a meetup on machine learning, Gigi, or everybody?
I mean, I'm not an expert on this, so I just use it a few times.
But we could probably attract some pretty advanced people. Give me a yeah in the chat box if you want to have a meetup about that. I could schedule one. I've never really done one about meetup about machine learning. Would be interested in one. Just give me type a yes. There's 9 of you guys, so I'm pretty sure. Daniel says yes with an exclamation mark. So I think a lot of people will be pretty enthused by that topic. Well, we should do that.
Yeah, but the problem is who is going to know what to speak about. I mean, you would need some machine learning, if not an expert, at least an advanced guy.
No, I'd be really interested to hear somebody who is using it. They don't have to go into details on how they're doing it, but that they can convince me and another group, because there's probably a lot of skeptics out there, and I'd like to hear from people that are actually profiting off it. Yeah, I think Mark said, I think LQ session a couple of weeks ago, much covered it all. You probably won't get better than that. Yeah. I think Mark is right. I've talked to him at great lengths about it, but he you got to realize he did his BA in robotics, so he's pretty advanced. Anybody else got any comments in general? Because we're coming up to an hour and a half now. Let's see. Jeff says, if you see the market as a swarm of fish, look at it the other neutral networks require lots of computation. GA fix the optimization issues, combine GAs with neural networks. It has application in finance, robotics, cyberware, warfare, everything. This is the future. The market is Darwinian. Why not take genetics and neural nets and unleash them on the markets?
So there are some funds which are doing something similar. For example, they track not individual, but they try to track different segments of investors. So they know that there are 1 week trading guys which trade like they buy on the resistance and sell on the spot or stuff like this. So they try to track individual positions in the market to see when will they get called, margin called, or when will concentration happen. So they are trying to predict what the swarm of fish is doing. This is called agent-based modeling.
Yeah, and that I know that I've seen that in F#, but just so the genetic algorithm, I know this webinar from MathWorks from MATLAB talks about this with the genetic algorithms right here on a moving average. This I know would work for sure. But if you guys want to check that out, I'll put this link in. It's a very good, very high level webinar. Can you apply agent programming in Python, Gigi?
What?
Agent programming.
Well, agent programming is like a simulation, so you can. I mean, agent programming has a different interpretation in the stock. In the software industry. So it depends on exactly what you mean.
Okay.
I mean, there are agent-based frameworks which like have little objects which send messages to each other, and it can mean this, or it can be like a simulation which I talked about. And for sure there are libraries for this, but I would pretty much build my own if I were to do this.
Yeah. Because
it's not very hard. I mean, you just have to. You have like little conditions. So.
Yeah, I know F#'s good for that. They're using that as an advantage over Python supposedly. Anybody else got any comments at all? Is there anything you like to add, Gigi?
Related to this, no.
Public data. Anybody else?
I mean, pretty much even the price data, it can be considered public data. So.
Yeah, that's true. But I'm more, talking about issued from like a government agency, like a school or a ISM.
Well, my opinion is that pretty much everything which is public is immediately incorporated into the price. So if you are not the one which incorporates it into the price, you're pretty much lagging behind the market. So this is why I don't quite believe in these things.
I hear you, but I think we're coming from two different worlds, at least me and you are, because you're more intraday, I'm more, as I said, holding overnight for a couple of weeks to months.
Yes, but you have to realize, why am I doing this? I mean, wouldn't I prefer to open a position at the beginning of the month, close it next month, and do nothing in the between? I mean, nothing trading related. I would prefer this, but the problem is that it's not that easy. All this easy stuff which can take months to do, I mean, you can hold the position for a month, is pretty much arbitraged away in the market, and it's random.
Right.
So there are studies which show that the market, the higher you go in time period, like the higher the period, the higher the random content of the market.
Yeah.
So pretty much everything about 1 hour is random. So the only inefficients left in the market are like below 1 hour. So this is why pretty much everybody tries to do high frequency trading, because the longer term stuff doesn't quite work anymore.
Right.
So I mean, you are taking a lot of risk if you are doing 1 month trade. So this is my view.
Right.
I would also like to buy the stock market today, wait a month, make 10%. But
Yeah. Yeah, but then that's what all retail traders do, right?
Yes, because they trade on noise, so they don't have. I mean, I think they are right in trading intraday, but they are wrong in their methods. So they don't use this method.
Yeah, we've talked about that. Why retail traders get slaughtered all
And
the
the
time.
other stuff is called the coastal length of the market. So it's like a fractal. If you measure the length of the Canada coastline using a 1 kilometer ruler, you'll get a length. If you measure it with a smaller ruler, you'll get a much larger length.
Right.
So the idea is that, for example, the euro dollar, the forex euro dollar, moved, let's say, 10% in the last 3 months. If you measure it just like today and 3 months ago, a 10% move or a 5%, I don't know.
Right.
But if you are measuring each day the move, so 0.1 today, 0.2 today, if you add these things together, in the same 3 months, you get like a double amount, like a 10 or 20% move.
For sure.
And if you move it an intraday, like each hour move, you add to this hour it moved 0.02% and so on. In 3 months, you'll get something like 100%. So the idea is that the lower you go in frequency, the more you can extract from the market.
Yeah.
So if you perfectly predict the 3 months move, you'll get 10%.
No, I hear you.
But if the key is that if you only predict like 10% of the 1 hour moves, you'll make 80%.
Yeah.
So you need to be much less accurate, and you can filter much better your moves to get the same amount of money.
Sure, but then but the other end, you're also taking on a lot more risk as well. So some can do it, some can't.
No, it's exactly in the reverse. You take it much less risk, because if you make 10 trades in 1 month, in 1 year, 1 month each, and you win 6, you lose 4. You'll have for 4 months in the row. For 4 months, you'll be under zero, so you'll be underwater. How to say it?
Yeah.
But if you trade like each hour, and you have the same winning percent, 60%, 40%, like 14 hours each day you'll make money, and 10 hours each day you lose money.
Right.
But in each day you'll be profitable. So absolutely each day will be profitable. Unlike when trading each month, where half of the year you'll be unprofitable. So this is why high frequency is so attractive, because you can end pretty much each day in the black with money.
Right.
Even if half your trades are losers. So.
Anybody want to respond to that? Because we could talk about that all night. Oh, somebody's got capital letters here. CBOE warning. Okay, so this is from George. It's prohibited to download delayed data table from this website by using. Yeah. Have you ever seen that, Gigi, about this? You cannot download from CBOE. I don't think they could stop you.
There, so, I assume that pretty much everybody has this kind of language on it. So I'm sure that Yahoo also has this language in their somewhere in their contract. So
I think it's just their way, their liability to protect themselves. Yeah. Good call though, George. Anybody else got any comments at all? Coming up to an hour and 40 minutes. No? Because I can't remember what we're doing next week. But let me just pull her up here. We are doing risk. We did risk management, but this one's a little different because this one you might like, Gigi, is I'm trying to, because everything's now automated trading. What I'm looking at is how a system can self-evolve for money management, risks assessment, that sort of thing. So be good to talk about that next week. What say you, Gigi?
Yes, sounds interesting. But I think you also had didn't have you have like a money management like 2 weeks ago or something?
Yeah, that's different. This is like where automated trading is very useful, where it can scale it out to pretty well limitless. At the same time, you can use a system that can self-adapt, so the money management on the next allocation of portfolio or how much to assign or weight on the next trade based upon the Kelly criterion for winning ratio, that sort of thing.
It's like a re-optimization, right?
Right. Yeah, so that's what I was wanting to focus on. George just dropped off. George, have a good night, I guess. So that's what I want to talk about next week.
Sounds interesting.
Yeah, I think this would be the most interesting one for over the last couple of weeks. What I'll do is I'll put in November 17th. We'll do a machine learning one. We should do that. Alrighty. So Mark says you should make a gig co-host as well. Gigi, would you be interested in co-hosting? I think you already automatically co-host.
I'm not sure what that means. So
no, it's like what we like. You're officially a host. Maybe you should send me your bio and I'll put you up as the guest, like Lyndon Kwan. We can definitely.
So for example, just in my Twitter feed, just right now, let me put this link.
Yeah. Why don't you do that? Promote that to the world. Let's make it world.
About machine learning. So if you can open the link.
Yeah.
So it says that a dark pool is using machine learning to, to optimize the way the trades are matched inside the dark pool. So of course they are not trading per se, but they are using machine learning to help the traders who are using their dark pool.
Man, this is gonna go against us now. Good God. I would say jokingly the end is near. Because, what do you think the future of dark pools are? You think they'll still be around in a couple of years?
Well, they make sense in, if they will not be forbidden, yes, they will exist because they solve a need, so.
Sure, but then they go against the little guy, the retail trader, and I think
No, how did they go against the retail trader?
You don't think so? If you get an institution...
No, because, for example, they have a limit, they require 10,000 shares. Can the little guy put a 10,000 share order in there?
Yeah, but
meaning that there's still liquidity.
No, it's not about liquidity. It's just about they're not sharing what's being traded, who's doing it, and because only the.
I think they are forced to share, but only after the market closes or something like that.
No, but
they can hold the trade for a few seconds.
Well, the argument is that you got a VP at Credit Suisse that can pump a $100 million order in. And he has a way to stagger it through different routes and different pipes, and no one would ever see it. And I think that's the argument is that it goes against the little guy, the retail trader. So it's.
I don't quite buy this argument. So
I'm in both camps.
The thing is that they will always hide their trades. So if they will not using these pools, they will segment it manually. They will always are trying to hide them.
Right, but that's what I think they're going to try to eliminate. But on the other hand, if it was to happen, they would have done it years ago.
They can't eliminate it because they are saying that we are the big pension funds which hold the money of the little guys, the pension money of the little guys, and we are trying to hide ourselves so that the little guys which have pension money with us make the profit, so that they have a pension. So they are using the same argument that they are pension funds. They are not evil. They are good guys.
Yeah,
they are trying to hide from the evil high frequency traders.
Yeah.
So actually, the argument goes in their favor for dark pools.
Yeah.
The social argument.
Yeah. There's different. There's different arguments against, but I'll definitely go through this. Anybody else want to share anything? Hopefully, you guys will come out next Monday. Same bat channel, same bat time. Anybody want to chime in? We're coming up to close to 2 hours. Gigi, you gonna come out next Monday? You don't know.
With risk management,
Well,
I
self-adapting. Well,
If I
whatever.
don't have other stuff to do, maybe I'll come.
Okay. Well, hey, why not? So I guess we'll call that a wrap for tonight. Anybody else got any comments or questions at all? If anyone wants to type it up, try to address anything. Anybody, the new people that have shown up? Let's see, we got Greg. I know Greg. Spasibo. I'm not sure what that means. Let me just do it.
It means thanks in Russian.
Oh, spasibo.
But I don't think it's spelled like that. So I know because Russia is like very close to me, and my father spoke Russian because it was a mandatory language.
He's a Romanian.
Yes.
Good try though, Daniel.
Yes, it's written a little bit different, but I think it means thank you.
Well, you always learn something new. Anybody
How
else?
does he know about this? So he has an American name and it's in Florida.
Well, you never know. He may be related or married a Russian. Who knows? Or who knows?
This is how it's spelled.
Spasibo. It sounds Italian or Spanish.
Because this is not in the Russian alphabet. So it's
Okay.
Latin alphabet. They use a different alphabet.
Right. Anybody else got any comments or questions at all? Hopefully you guys will show up next week. Wonder what about ITG algo will work during a flash catch or major downturn if they over optimize.
What I would like to say to Mark is that yes, you are right about over optimization and what you are saying there, but you have to also realize that there are experts which are implementing this algorithm and they also know about these things. So you have to assume that they also know about these problems.
So there.
So it's not like some guy who will come from the street and they took a Python machine learning algorithm and let's put it in the market. Obviously, there were some experts devising this, and I'm sure that they did some testing. So.
Yeah. Anybody else? No? Anybody? Oh. And these guys at high frequencies don't really beat the market as we talked about. Some do. Most don't.
Hedge funds, not hedge funds.
Yeah. Well, I mean, I know Vanguard. They're a high frequency shop. They're the largest mutual fund player in the world. There's got to be a reason why they're doing well. High frequency does work, without a doubt. Yeah, but they're still using high frequency trading methodologies. So
because if you want to execute $1 billion order, you have to go high frequency. I mean, you can't just dump it in the market.
Yeah, and there's also this misconception that high frequency is good for little guys. Wouldn't you agree though, Gigi, that you need to be a multi-million-dollar fund or have in your account to be able to really pull it off?
So you said that if it's good for the little guy in the sense that the little guy benefits from this?
No. I'm asking if to be a real true HFT shop, you have to be multi-million dollar.
Well, it depends on what you understand by HFT. If you understand like 5-minute trades or you are trying to do triangular arbitrage in the currency market, I mean that can only be done in hardware today, not even in software. So if you have to build your own hardware to do that. Yeah. But if you are meaning HFT in the sense of opening like 2-hour positions, sure, you can do them from home.
No, I'm talking about from a trading capital point of view.
It depends what are you trading. So for currencies, for example, you can trade them with very little money. For I don't know, it depends on what are you trading.
Yeah. Okay.
But I know for a fact, for example, that in the US you need to have $25,000 into your account if you want to trade a stock more than 5 times a week. So basically, if you are doing any kind of intraday trading in the States, you need to have 25,000.
Yeah, the paid data account. Paid data, no, day pattern trading rule.
Yes. So this can limit a little guy. So it's interesting that the most free country in the world actually limits your freedom, so to speak.
It's to protect you.
Yes, because you are stupid if you are poor.
That's
you
right.
Can't handle your trading.
That's right. Anybody?
But of course, they don't forbid the lottery, which is also played by stupid people. But
well, what about Vegas? Vegas is
casinos.
Vegas is always my argument on that. Anybody else got any questions, comments at all before we wrap her up? Vanguard, etc., using VWAPs, not HFT.
I know for a fact that they are not using VWAPs because there are algorithms in the market which are seeking VWAPs algorithms. So when they detect a pattern of trading which suggests that there's a buyer or a seller which is using a VWAP algorithm, they are going to predate him. So if you are trying to do a $1 billion trade using VWAP, you're going to get burned because this algorithm will detect you and they will trade against you. So VWAP doesn't work anymore these days. So
what would I do?
They are using stuff which, for example, which is called algorithmic shortfall, or actually a very interesting thing they are using is random trading. So because randomness is the only thing which can't be predicted. So if you trade in random lots and random sizes at random times, nobody can predict you. Not even you can predict yourself. So the more advanced the algorithms which are trying to detect big players are becoming, the more it makes sense to trade randomly. So, for example, one paper that I read recently said that one of the best way to execute a large order is to execute a very large amount of it at once, then to wait some time for the liquidity to reappear, and then to execute the last part of the order, at once. So.
And you just add another one.
I mean, there's a whole theory on market execution, how to execute to get less impact in the market. Because when you trade $1 billion, even a minute improvement into your execution translates to $1 million of profit or of loss.
Have you seen this last comment from Mark? For execution over a period of time, not HFT.
I'm not sure how to respond. They are using HFT to execute, so you are saying that they are not using the high frequency algorithm to execute? They are doing it manually, or I don't know.
I'm not sure what he's trying to say. Anybody else got any comments or questions at all? Down to 8 people. 7 people. Okay, let's give her a wrap. You want to give her a wrap, Gigi?
Yeah, sure.
Oh no, Daniel just came back. Is there an interesting paper that used stochastic methods to extract large trades that are trying to hide by random sizer?
I'm not sure because by definition you cannot predict randomness. So I'm not sure. Maybe not fully random. I don't know. But like he said, indeed, everybody is trying to detect these trades. So they are trying to detect anything which might indicate that somebody is selling a big position. So
yeah,
this is why VWAP is not used anymore because that's very easy to detect.
Well, not only that, but aren't there a lot of brokers that are controlling predatory algorithms for that sort of thing? They're trying to protect their own clientele.
Yes. For example, there was this algorithm in the Flash Boys book where they sent the order to different exchange, but it gets first to the closest exchange and then it gets later to the other exchange.
Right.
So they are front running you until you get to the second exchange. So they invented this algorithm which makes sure that the orders get in the same time to all the exchanges, for example.
Yeah. Mark says they send an algo to an engine to an agency, for instance, but it's not in the same category as HFT. They're afraid of the HFT front running their orders.
Well, maybe for the smaller hedge fund, but the bigger hedge funds, they execute themselves. So they have their own execution desk.
Yeah. Can you apply cryptanalysis?
That's for analyzing encryption, so it has nothing to do with this. But some methods, maybe, I don't know. But that's for analyzing, for breaking the encryption. Because the encryption is not random. So it looks random if you don't know the key. But if you know the key, it's not random.
That's beyond me. Anybody else?
But anyway, I never heard of cryptanalysis used in the market. So never heard of this.
Yeah. I've had some interest in these areas, but who knows? Anybody else got any questions? At all? Oh, Mark's, they use the same standard commercial software, though they're not using state-of-the-art quote order executions.
So I'm not sure. How do you know what Vanguard is using? So have you been there?
No, I've seen. Let me pull up an article on it. So I've read some articles. about HFT. Here, this is a article on Forbes from Bill McNabb. Here you go. He's one of the proponents of HFT.
So he likes HFT.
Well, the founder even, I mean, they use principles of HFT. I mean, Vanguard, that's why they dominate the market.
Of course, because everybody is trying to front run Vanguard because they know that it is very big, so they have to hide from the market.
Right. Yeah. HFT platforms are mostly high performance custom jobs. They're mostly using portfolio management, which are lower frequency. I'm not sure if that can be universally said though.
Well, if you are trying to trade, you'll certainly benefit.
Yeah. Looks like a lot of people are already dropping off, but thanks to those that may drop off over the next couple of minutes. Thanks for Daniel for coming out. Greg just dropped off. Who knows? You know what? We can continue talking about this next week. Why don't we do that?
Sure.
All right. So I'll give her a wrap tonight. Anybody else gonna want any comments or questions at all? I know we could probably go all night. Jeff says thanks. Thanks for coming out, everybody. Hopefully you learn a lot. I'll put up all the notes and the video replay up on it over the next couple hours. Yo, man, thanks. Steven just posted something here. Steven DeFazio.
So, for example, this quote in this article, he says that his firm, Vanguard, is spending heavily on technology. So if they spend heavily on technology, this means that they are not using the other guys' trading software. Because if they were to use some other guys to execute, they wouldn't need to spend on technology, right?
Yeah.
So they are saying that they are spending heavily, so they are doing it in-house.
Yeah, a lot of companies do that when they can afford it. So that's a sample employee. Wall Street tech isn't expensive in general. Oh, we know that. Yeah. I mean, we know Wall Street guys, especially these developers, make a lot of money. No doubt. Even commercial systems are costly. Yeah, I know, Mark. We've looked at one called Deltix. It's $9,000 a month. So yeah, they're not cheap.
Well, Bloomberg, I think, is $28,000, but a year, I think.
Right, and that's just for research.
Yes, but you can imagine if you look at a big bank, they have like tens of course, they may be getting discounts. But they are still paying a lot of money.
Sure, yeah. I mean, no argument there. I mean, technology is a huge cost. Like Vertu, can't remember the figure, or they make like $500,000 or something over the year, but they're spending half of it on technology.
So there was this article recently about US high-frequency trading, which bought like an antenna in Belgium to put their microwave radios on top of that, and they paid $5 million for that antenna.
Yeah.
So,
yeah, it's a big risk. It's not as glamorous as some think.
That was a single antenna, so it was a single antenna.
Yeah. Down to 5 people. Anybody else? Sounds like Mark, join us next week. Let's give her a wrap now. Let me just.
Okay, bye.
Okay, thanks, Gigi, for coming on out, But thank you, everybody, for coming out. I'm gonna stop recording in a minute. I'm just trying to grab the list here of all my notes, all the links and stuff that's been shared. A lot of good stuff. Let me just pull up. And here. Voila, we're all good. Okay, so I'll say goodnight to everybody. Thanks for coming on out. And we'll talk to you later, all right? Thanks again. Thanks, the 4 people that are left. Have a good night, eh?